Stocks are likely to keep going higher, says the junk debt. Gold is currently showing strength but is extremely overbought, and oil is attempting a rebound. Today's edition will be relatively short, but mostly because not much has happened. So don't forget to like this video, share this video, make a comment. This is what keeps the channel going. If you're a subscriber, stay tuned. We'll be covering a few stocks, some of the ETFs, large cap stocks, as well as some of the gold related and speculative securities. Right, let's look at S&P 500 first. We're looking at S&P 500 on daily time frame. As always, I'm using my proprietary MasterCharts trading price action indicators. You can find out more about them. There on this chart, there's green, blue, red, and yellow line. So currently, technically speaking, we're currently in a bear market, and we just had a signal to sell short the S&P 500. So how do I know? We had a close below the yellow support resistance line right there on April 4th. This implies an entry into a bear market by the S&P 500. We were waiting for a rebound, which came. I mean, we had this giant candlestick on April 9th. And then now we have a close below the red line right there on 16th of April on Wednesday, the day before yesterday. And that is a signal to sell S&P 500 short and a general signal to take a short position. So all of this well and good, and I already explained why I think this could be a bear trap versus an actual bear market. Last week I explained it, especially this candlestick on the 9th of April. I mean, it's truly gigantic. It's an outside reversal, it's a bullish engulfing. So I am very reluctant to sell this market short, at the very least until some sort of a more clear picture comes into focus. The main premise of today's edition was the fact that high yield bonds, junk debt, actually are behaving quite positively. Now on this chart I am showing an adjusted chart where I'm hovering. It says ADJ. I can unclick it and you can see that if we remove the dividends, or in this case coupon yield, for this ETF, high yield bonds, JNK, then we definitely have already entered the bear market. But if we include the dividends into the total return, then by no means we're in the bear market. In fact, we just had a signal to buy high yield bonds. So notice how high yield bonds are currently above this blue support resistance line and actually are rising, and this is all-time highs, not that far off, versus the S&P 500, which kind of collapsed to a 52-week lows here, and now is barely rebounding. So I tend to trust high yield bond traders more than I trust stock traders. It takes a little bit more sophistication to trade high yield bonds. So currently what I'm seeing is high yield bonds are actually showing strength. And why do I care about high yield bonds? So let's take a look at correlations. So we're currently looking at high yield bonds, and down below here is a correlation coefficient in yellow, and this correlation to the S&P 500. Notice that correlation is with S&P 500 for high yield bonds is generally very large. In other words, whatever high yield bonds are doing, stocks are doing the same thing, more or less. And currently high yield bonds are actually giving us a buy signal, if anything, and they are approaching all-time highs with dividends once again. So I am again somewhat reluctant to take this short signal, mostly because of the way this collapse basically of stocks unfolded, and also because of the way this several candlesticks acted. Like for example, this one on 7th of April is also quite bullish, and then this one is extremely bullish on 9th of April. So again, I'm reluctant to sell this market short right now. So I would want to wait and see where this takes us. So again, like let's just wait and see. I think something will clarify within next few days, 2 weeks, and we will go from there. We can also look at the 4-hour chart. So we're currently looking at the 4-hour chart, and the ticker symbol I'm using for this is this one, US 500 from Capital.com. It's a continuous security, meaning that it is a um, it's a what's called a contract for difference. So it's basically mirrors the futures of the S&P 500. And on this chart, several things stand out. Number one, the biggest one that I see here is this partially filled gap that occurred on April 2nd. And normally, gaps are usually filled sometime, we just don't know when. And so I think at the very least, we can expect to at the very least try and fill this gap. And this implies a move of at least 3 to 4% higher, 3 to 5% higher from today's prices. So I am moderately optimistic about the prospects for stocks, and I think if this gap gets filled, then we're extremely close to a bullish market. So let's look at this on a daily chart again. So here's that gap I'm referring to. This is 2nd of April, right there. And so if that gap does get filled, when, like I said, we can expect about a 3 to 5% move higher from here. The thing is that if we move about 3 to 5% higher, we're actually extremely close to the new bull market. And new bull market is right there at 5,655. So new bull market from today's prices is only 6.5% away or so, 6 to 7% away. So if we move 5% higher and fill this gap, then a push just a little higher could be really, really possible. And if that happens, we're out of the bear market. We just need a move higher towards 5,655. Close above it, we're in a new bull market. So this we can ignore this, basically this new bear market that supposedly began on Friday, April 4th. Let's see if it actually happens. If it does, then again, we'll play accordingly. Briefly, let's look at gold and the US dollar. We're currently looking at the US dollar currency index, DXY. So we just hit new lows very recently, just on last Friday rather. We can also look at the weekly chart, and we can see that we're breaking down below recent lows. We're below the July 2023 lows. If this continues, most likely we'll continue lower, another 7% down or so. So it does look like the current administration is trying to weaken United States dollar for whatever reason. This is the reason why, or rather, this is what's at least the result of the current policy is happening. And of course, as a result of weaker dollar, gold is going through the roof. Gold is traded in dollars, so it's XAU divided by USD, XAU USD. The bottom part of this equation, USD, just got weaker, and we see in a fresh new all-time high. We just hit a new all-time high at 3,357. So that's a very, very big run. If you recently opened gold, for example, you could have opened it recently. It was literally a year ago in February of 2024. If you opened gold back then, you're 62% up. However, of course, if you just traded gold miners, and even the latest move was 43% higher for GDX. So you can definitely, trade gold as a hedge against inflation. You can also use gold miners. Gold miners are even, they give even better returns. Like, for example, if you opened, for example, here in April of 2024, that's 67% move in your favor. So definitely gold miners and gold are shining. However, of course, this is extremely steep advance. I think that, we're overbought. We haven't yet made any kind of meaningful top. I thought this was the top on the 31st of March, but so far this has not been the top. So maybe we'll continue higher, but definitely is overextended. Definitely possible it will pull back, especially if dollar decides to kind of start bottoming here and maybe moves higher. If dollar doesn't stop bottoming, then we could continue seeing gold make new records, even higher. We don't know how high it will go. It's anybody's guess at this point. It already has outperformed pretty much all of the expectations that I'm seeing on this chart at the very least. Okay, and let's look at oil. We're currently looking at light crude oil, CL1 exclamation point. I've shown this chart in the past. I turned off my indicators for now because I just wanted to show you like the expected price action. So we broke below previous lows, broke below May 2023 lows, broke below November 2021 lows. We even made a lower low below the February 2021 lows. So we're back to the prices not seen since 2021. Definitely this broken support is important. And as I was shown in the past, usually we can estimate the, how much the move to the downside will be, based on the inverted, cup and handle pattern. So this move, for example, here is 31. This depth of this pattern is 31%. This pattern is between, for example, May 2023 low and current, and the previous support that was around $63 or so. Since that support is now broken, we can estimate how much that move will be. So more of a conservative estimate is about this part of the cup, so it's about 22%. If that happens, we can end up in the lower 40s. This breakdown, or rather this depth of this pattern, could put us into lower 30s. Let's say that this is the duplication of the pattern on the downside. Either way, this is not good for oil, although currently it is rebounding. So looking at oil on the daily time frame, we can see that oil made a new low here on Wednesday the 9th of April, but then has been rising ever since. Additionally, notice the way the indicators are curving down, which makes it easier for oil to reach bullish price levels. Bullish price levels for oil is at $73. At that point, if we close above that level, then we might actually keep going higher into the 80s, etc. Now, again, for now, the support has been broken, and we'll see if the most logical area of resistance would be around $66, which is the red line currently. And I think when we get there, we will need to reassess and see if we want to sell the oil short again, and to see if it will continue lower afterwards. All right, that's it for this week's recap. If you want to stay, please stay tuned on how to find me on the internet. Other than that, thank you for watching and have another great trading week. So please go to MasterChartsTrading.com, click on sign up for one of the products. Currently I have 2 products in one bundle. We're hoping to have another product I will explain what that product will be in a few seconds. So the first product is trading indicators. So on this, you can get the same chart, or you can get the same indicator lines on your chart. There's green, blue, red, and yellow lines. They are available for TradingView.com. If you get a free TradingView.com account and then go to my site, MasterChartsTrading.com, sign up on my site, and then I'll open the door for you on TradingView.com. Yes, it sounds convoluted, but there is no other way to do this. So if you want my indicators, just do that a little bit of work. Open free TradingView account, come back to my site, sign up, and I'll open the door for you. You will have the same lines on your chart. That costs $24.95 per month if you buy a yearly subscription. Equivalent of $24.95 per month if you buy a yearly subscription. You can also get a monthly subscription at $29.95 per month. I also send out daily newsletters and weekly members only videos about the various securities to trade. For example, this week we have traded all of these various securities, some ETFs, large cap stocks, speculative securities, as well as gold related securities. If you just want that newsletter, that's $33.29 per month equivalent if you get a yearly subscription, or a $39.95 per month monthly subscription. And of course, the best deal is to get both trading indicators and newsletters, currently at $49.95 per month with a yearly subscription. All of my products come with free 7-day trial, so you have 7 days to try it out and cancel if you don't like, although very few actually cancel and they stay for the long term. The third product we're going to be having hopefully very soon, within the next few months, is stock ratings. It will basically issue buy, sell, hold stock ratings. They're not recommendations, they're just ideas that are generated by the algorithms that we employ. So hopefully that is coming sometime in a not so distant future. Stay tuned for that. Other than that, don't forget to hit the like button, subscribe to this channel, share this video. Thank you for watching. Have another great trading week. Bye bye.